Hi everybody, this is APRI from MyChartCoach.com, and in this video we're going to take a look at some of the top stocks from today. First up, we're going to take a look at Gevo, ticker symbol GEVO. Closed up another 53% today after that huge move yesterday. It had a giant gap up open. It was trading higher in after hours trading yesterday, signaling that it wanted to head higher. That close above the blue line, the 300-day simple moving average at 1184, did signal more upside potential. It closed above all the moving averages yesterday. It had to stay above that level. It did with the gap up open. It ran to 25 and pulled back. It formed this small real candle body well above the upper Bollinger Band, which is down here at $13. Many times the candles will work their way back into the bands when this pattern forms. It's currently trading at 1820 and after hours trading, so it did pull back after hours. And so if it does work back into the bands, this $14 level is a big level from back in January. It was the all-time high close until today for 2018, and so you'd like to see 14 turn into support. If it did work back into the bands, you want to see that 300-day simple moving average hold. If it dropped below, that would signal downside risk. Now take a look at the GEVO weekly chart. You can see what happened is it hit this resistance level from back here in 2017. Between February and May, there was this big support in this $20 range, and so it came up and it hit that level, and what was once big support turns into resistance. And so right now it's hitting that level. It needs to close above, and then that's when it can head higher. If it fails to break this 20 resistance zone, the candle could work back into the bands. You could see this week's candle is pushing through that upper Bollinger Band, which is down here at 1488. That is lined up with the high close here from September. If it pulled back below that, what you want to see is this 50-week moving average at 1077. A weekly close above that level would be very bullish, but it has to break through 20 to get higher. If you look here at the GEVO 15-minute chart, this was a chart we were working on today, and you could see here that this was the high close from yesterday at 1 o'clock, and then today at 10:30, the close was above this closing price, and that signaled more upside potential. It ran up to a new high at 11, and it needed to break that level. It needed to break that level in order to keep making a new high, and that did not happen today. And so this was the high of day, and then notice it pulled back, and then it made a lower high right here, and so failing to make that new high was a red flag. And then the middle Bollinger Band did break into the close, and so that was another red flag, and so you have the drop below. And so right now it's bouncing off of the high close from yesterday, from the 18th, this $19 level. If it drops below 19, the risk is that it'll come down here and test that 50 simple moving average at 1647. That's the next big support level to hold below. It has to get above this 22 resistance level, this middle Bollinger Band, and turn it back into support to head higher. Okay, let's look at SLDB. So check this stock out. Closed up 46% today. It's on a tear. It's been, it's breaking out on the daily chart here, and as you can see here, it's pushing hard. It had this huge spike in volume today. Look down here in April. It was trading in the $7 range in April, and today it hit 54. So this was a huge moneymaker over the last couple months. As you can see here, that it got above the middle Bollinger Band in the second week of April, on April 11th here, and the candles had just been riding EMA's 4 and 8 support the entire time. When it came down and tested the middle Bollinger Band here, support held, it bounced, and it continued that pattern higher. Now today's candle is busting well above that upper Bollinger Band, and there is that long upper wick with this big volume spike, and so the candles could work into the bands similar to what we were talking about with Gevo. If they do, what you would like to see is that $33 level hold. As long as it keeps holding this EMA's 4 and 8 support, the uptrend should continue. As you can see over here, sometimes when the candles get above the upper Bollinger Band, they work back into the bands. See how that happens sometimes? And so, you know, not every time, you know, it pushed higher, but this is a big push above during a multi-day uptrend, so you have to be prepared for that if you're trading this. As you can see here, this is the SLDB weekly chart, and so this is the entire history of the stock. It just started trading back here in January, and so this week it is breaking above the all-time high weekly close, which is from February here, just below 34, and keep in mind that this week's candle does not set until the closing bell on Friday, so this could pull back and end up closing below this level by Friday. Anything could happen, but if it does close above, that would be the all-time high weekly close. As you can see today, that 54 level, that's an new all-time high. Okay, so this is on a blue sky breakout. It's busting out to new levels. You know, it has to break through 54 to head higher. Now it's just all about the intraday resistance and you know, just pushing higher. As you can see here, it is busting through the top of the upper Bollinger Band on the weekly chart. And what you want to see is you want to see the candles continue holding, just like on the daily chart. EMA's 4 and 8 support higher. Notice how they're staying above the pink and the lime lines. As long as that continues, the uptrend should continue as well. Now that it's above this 34 level, it needs to stay above. If it dropped below, that would signal consolidation's likely coming. Okay, take a look at ASTC. This was the big winner today. It closed up 226%. I mean, you had to be in this yesterday, really, for this to, or, you know, had traded at pre-market for this to really have paid off because of the gap up open. You could see the open was up here at 675, and then it closed down here at 636. So even though it closed yesterday down here at the what was this, way down here, below $2. Today, with that huge gap open at 675, it pretty much closed very close to where it opened the day. Not a lot happened. You know, there was this giant move from $2 all the way up to $6, but really there wasn't a lot of action. It ran up to 825 and it pulled back, and then it ended up closing below the open. That's what forms the black candle. And so what this signals is the bears were in control. There were some bulls that were loading down here off this 550 level, and they were able to push the share price back up, but the candle is floating well above the upper Bollinger Band. It's way down here at 406, and so the downside risk is that the candles work back into the bands and test this 300-day simple moving average at 366. The big level to hold, you can see the lower wick bounced off of it, is the high close from back here in September, the bottom of this black candle, and so that's lined up with about 550. You want to see it hold that level. If it dropped below 550, then it could end up consolidating and pulling back into the bands. You know, many times when the black candle forms, it'll stall out, similar to here when that happened back here in September. We'll just have to see if it can push higher. If you look at the ASTC weekly chart, this shows you what happened. It came up here and it hit the 200 and 300 week moving averages, the red and blue lines, and that became the intraday resistance today. It hit those levels that signaled the top, and it pulled back. And so when a stock's breaking out, when you have a big breakout on the daily chart like this, you know, it always pays to go to the weekly chart to find the next resistance levels. And so it's going to need a break above 835 to head higher. The big level to hold on the weekly charts, the 100-week moving average at 524. A weekly close above that level would be bullish. If it were to drop below that 524 level, then it could work its way back down to that 50-week moving average at 322. I mean, this was at the very bottom of the chart. You could see way down here, and so it busted through all the moving averages except for the 200 and 300 week moving averages. Now they're going to be tough to break. If it did close above, that would signal that it wanted to head higher. As you can see, this is what I'm talking about, how there wasn't that much money made besides whoever got in before the big move, because this is the open right here, and then it just went sideways. You know, it pulled back after the open, and so you know, if you didn't exit right away, you know, you quickly were underwater if you loaded, you know, on this opening candle, and then it never got back up to that high close. It has to break above this high close just below $8 to head higher. Now it's in the sideways channel, and so 7 is the top of the channel, and down here around 560, 550 is the bottom of the channel, and so if it breaks above 7, that'll signal it wants to head higher, then it has to get above 8, and then the risk is if it drops below this 560, 550 level, the low close from today, then it could drop all the way down to the 50 simple moving average at 415. Okay, take a look at SRPT. Okay, this is another big winner today, closed up 36%. Another black candle, and so it had the big gap up open. The open was up here at 160 and it closed down here at 143. So even though it ran to 175, it traded well off the high of the day. The signals the bears were able to drive that price back down. The upper Bollinger Band's down here at 120. You have EMA4 at 118. If the candles work back in the bands, you want to see that level hold. Is it going to be able to break out higher from this level? We'll have to see. It has to get above 160. So if it's trading above 160, that should signal it wants to head higher. Now, if 145 turns into resistance, you could see it drop back down to 120. It is on a 4-day run with a big volume spike today. If you look here on the monthly chart, how to use a monthly chart to find the key resistance level, all the way back here in 2000, the high close right here, it hit that level and pulled back. And so the key is to have a monthly close above that level. So it's, if it can break above that what is it, 160 to 175 zone, that's going to be the big signal that it wants to head higher. If it stalls out in this key resistance level, that could signal a temporary top. You can see, this is a huge pattern where it hit these highs and then came all the way down in 2009 and then 2012 and formed the a W double bottom type pattern, and then it worked its way back up. This is pure, this looks like echo theory, where you have the one side of the chart looks just like the other pretty much. You have it worked its way down, and then now it's working its way up. And look how it's a mirror image, not exactly, but how this side on the right looks like the left, And so this could be the signal that this is the temporary top after a huge run. If it breaks above, then it could head higher. The interesting thing is that there's been good volume, but it's not the monster volume from back here. But look at the huge volume the past several years for this stock. Okay, if you look at the SRPT 15-minute chart, you'll see what it needs to do. It has to get above the middle Bollinger Band here at 145. If it can get above that level, it can head higher and possibly run back up to 165. It has to close above 165 on the 15-minute chart for that signal that it wants to keep pushing higher. If the stock fails to keep making new highs, that's a signal that it's cooling down and that it could consolidate. Breaking below the middle Bollinger Band is a red flag. If that continues to be resistance at 145, 146 there, that's going to signal downside risk. If it fails to hold this 137.50 support level, that's the low close today, then you could see a drop all the way down to the 50 simple moving average at 123. That's why we avoid these black candles, because of the downside risk. It just, look how you had the big gap up open and it looked all great, and just like the other stock that we were looking at there, it had the same type of pattern, where you had the all the magic happened right at the start of the day for ASTC here, the first two candles, and then it was the pullback. And then you have the same thing for SRPT. You had the first couple of candles, it was holding up here, and then it's completely, the bear raid all the way down. And so it's best just to jump out when you see that black candle form, because that's your signal to lock in gains, just for future reference. And when there's a gap up open, especially when it's above the upper Bollinger Band on the daily chart. Okay, look at CLBS, closed up 67% here. Yeah, this was a huge move. It came down here. This is another one of those stocks that they just beat it all the way down, drove everybody out. You can see the little bit of front load right there. Whoever loaded right here, they were, or whatever got it going right here. Okay, this is what we call the attention spike, and so this is your clue that it's heating up. Notice how it was the largest volume on this day until back here the last time that it was hot, and it also closed above the middle Bollinger Band on that day. Many times volume precedes price, and then it just took a couple days of patience while the middle Bollinger Band was turning into support, currently at 410, and then boom, the big volume came in today. Today was the big payday for everybody that loaded on on this attention spike. And so keep that in mind, you know, especially for these penny stocks. It's always, you know, many times the volume will come in before that breakout. And so the the big move today was the close above high close resistance, which was the closing price on the top of this white candle. And so if it can stay above this 610 level, that would be very bullish. Also the open here on this candle on March 6th, you know, if it could stay above that, that would be bullish as well. The thing is, if it were to pull back below and drop down below these levels, then that would signal a temporary top. You know, it will have, once you break above a key level where a stock has topped out at in the past, it needs to turn that level into support. If it gets sucked back in, then it could consolidate. And so you know, it'll signal that it wants to head higher. If it stays above this 640 level, you know, if it drops back in and it gets back down into that 610 zone, that's going to signal possible consolidation coming. If you look at the CLBS weekly chart, it came down here and it made this double bottom here. It hit in 17, it made a bottom, it came back up, and then it made another bottom and held that level in November of 2017, held the December of 2016 support level, and then it's been heading higher ever since. You can see the higher lows, you know, forming this you know, ascending triangle type of pattern. It's basically this big sideways channel, and so it's breaking out of the top of the horizontal resistance level here at $6. That was the high close from March. That was the highest close of 2018, and then that also lines up with the high close for 2017, and so they both were roughly around that $6 level, and right now it's breaking above. It's hitting this key resistance level from back here in June and August of 2016, and so if it can stay above that, then it could work up into the eights. The big level would be to break now is this March 2016 close. That's a huge level. So right now, if it can stay above this 650 zone, stay above 660, these candles here, then it has a chance to work its way up to 8 and test this big high close there. So yeah, this is has a good steady uptrend going. It's making a big breakout here, higher on huge volume. If it drops below 6, that's going to signal that it could be a temporary top and it could consolidate again. Okay, let's look at some marijuana sector stocks here. This is Canopy Growth, ticker symbol CGC, closed up nearly 4% today. And so if you caught the video yesterday, we were saying that we were looking for a breakout above this 31 to 3150 resistance zone, and that did happen today. So that was really good to see. You could see all these candles here were lined up around this 31 level. And yesterday there was a close right at that level, and so it was either going to top out or it had three things it could do. It going sideways was running out of room. As you can see here, there's ascending support, and so this formed an ascending triangle pattern because you have horizontal resistance and ascending support. And what happens is the candles get to a point where either support or resistance is going to break. If there was a break below support, if this ascending support line were to break down, then that would signal downside risk, and it could have dropped down here and possibly tested this, at least tested that lower Bollinger Band at 27, maybe even that 50-day simple moving average. Now it busted out above high close resistance, above horizontal resistance, above the high close here from the 6th of June, and so this is all signaling that it wants to push higher. It needs to stay above 3150. You don't want it, getting pulled back down into this previous pattern. Like I said before, once above key resistance, it needs to stay above. I mean, notice the big volume spike behind the move, and so yeah, if they can refrain from the dilution, it has the momentum here now that it broke above resistance to keep pushing higher. You have a P-star bull flip. It needs to hold that middle Bollinger Band at 29.81. If it were to drop below, that would signal downside risk. If you look at MACD, it just started a bull cross on the 18, 13, and 5, and the 12, 26, and 9 is pinched. So this could be the start of a next push higher. That's what MACD and Parabolic SAR are saying. SAR stands for stop and reverse. There's also a bull cross here on plus DI, with plus DI crossing over minus DI. It's not at super frothy levels yet, just down here at 30. It just crossed over. You have RSI at 64, so that's still not at 70. You can see the last time it pushed hard, it got well above 70, and Fasto just got above 80, and as you can see here, it can head higher above 80 on fast dough. So we'll see if this will be the breakout. Okay, if you look at this other CGC daily chart, you can see the next key resistance level to break over here in January, and so this $34 level, all right, is going to be the big level. It's hitting the level right below that, which is the close below the high close, which was on the 8th of January. The 8th and 9th were the two highest closes, okay, and then today is lined up with that day. This is like, or actually, there's also the close here on this red candle. So you know, this zone right here is the high close zone, and so what's going on is it has this uptrending channel. So you have ascending resistance. Okay, and so it's hitting the top of that channel, and then you have ascending support. And so you have a good channel going where it broke out here, and it's really has a tight trading range going right now. And so if it can bust through this 33 level, that would be the closing price on the 8th, and then get through the 34 level from the closing price on the 9th, that would be the big signal that it wants to head higher. So right now, 32 or 33 and 34 are the two big levels. If it fails to break 33, that's going to signal a temporary top. It is hitting the top of the current channel. Okay, so it has to bust through and then take it to that next level. Okay, let's look at NEPT. Okay, so they just signed a deal with Canopy Growth that was announced today for Neptune's CBD oil, and so they had a big breakout today, closed up 31%. And as you can see here, the big level was tested from back here in January. The high closed from the 23rd, and so that's right about 350. And so it hit that level and it pulled back. You can see the upper wick on today's candle. And so it's going to need to break that 350 resistance zone to head higher. If it fails to break that level, it could consolidate like it did back here in January and February. Right now, it broke above the top of the current channel. You know, it had this channel going, or you know, this sideways action, whatever you want to call it. And so you could see here there was this tight trading range. You know, it dropped below it and it formed this double bottom type of pattern here, where there's a bottom and then another bottom, and then right now it's busting above all the resistance levels from this March through June pattern, and now it's back to this February and January patterns. And if it can get through that 350 level, that's going to be the big signal that wants to head higher. So it really needs to stay above 310 right now. If it dropped back below 310, then it could consolidate. Check out that huge volume. Look at the huge volume spike. Probably the largest volume day in the history of the company type of day. And so people are really behind this. We're going to see if you know, that's just dilution, or if they're going to be able to push this thing higher. I mean, check out the weekly chart here. This is a multi-year chart, and you can see what's going on. It has to break above this 340 level. If it can bust above that, that's the high close, the highest close of 2018. You can see it had this really epic run 2017 and 2018. And if it got above that 340 level, then it could make a run back up to the levels from back here in 2013. You know, right now it's hitting, you know, you have the close from 2014, the high close, which is lined up with the close here from 2018, all in that 340 to 350 level. If it breaks above that, then you have this 380 level from October of 2013, and then you have the big level, which is up here at 410. So it could be working its way back up to that 410 level and finally filling that jar all the way back up. Okay, so keep an eye on this. Look at that huge volume. Take a look at MMNFF. Okay, so this is MedMen. I'm not sure if you've heard of these guys or not. They were just on CNBC, and they are you know, they're like the largest dispensary player in the United States. They're really dominating the United States right now. You know, they're kind of like, you know, they're trying to be the Canopy Growth of the U.S. And so, but more from a dispensary. I'm not sure if they're in. I don't think they're doing the cultivation, but you know, they've got a lot of stores, and yeah, they're anyways, you know, so do the research. But the interesting thing is they went over to Canada to get listed, and so they're trading on the Toronto Stock Exchange and also over the counter. And right now, this is on a blue sky breakout. You can see today, this is the all-time high close. This is all the trading of the history of this stock. It just started trading back here in May, and so right here on May 30th was the first trading day. They pulled it back, and then as you can see here, today was the largest volume day in the history of the company. They were just on CNBC yesterday. And so it's breaking out higher here. And so blue sky breakout, the only resistance are the upper wicks in these candles. You know, the all-time high here at 415 basically is the next level to break. If it gets above 415, that's a clear blue sky. Blue sky means there's no overhead resistance. It's uncharted water. So keep an eye on this one. You know, if you want exposure to the United States, etc. So check out Aurora Cannabis. And so this is another top Canadian company. And so it closed up 4% today. It was a really good day for the marijuana sector. A lot of the top stocks were bouncing or making bullish moves, and Aurora Cannabis was as well after consolidating for multiple days. You could see it came down here and it filled this gap. There was a gap between high of day on this candle and low of day on this candle, and this doji here filled the gap, and then it went sideways. The whole time it was holding EMA 13, that's the orange line at 687, and it was also holding the middle Bollinger Band, the dotted purple line at 672. This was all signaling that the uptrend was still intact, and so it came up today. We were looking for a close above this gold line. It's been the tough level to break. You can see it tried to get above it back here in early June and failed. Today it hit that level and pulled back, and so going forward above 735 is going to signal upside potential. If it fails to break that level, it's going to signal more consolidation. So we're looking for a close above. It keeps hitting that level. It's got to bust through. So yeah, and it also has to hold that middle Bollinger Band to keep the uptrend going. Notice there's a nice volume spike today. You know, you've got the pinched on the 8, 13, and 5. There's plenty of room to run on fast stow at 59, and you've got RSI at 59 as well. So the indicators are showing there's plenty of room to run, and it's in a strong uptrend. It just needs to break through resistance. Okay, take a look at APRI, closed up 36% today. Yeah, this was a really nice move. It came up and it closed above the bottom of the gap level. So there's a gap over here between low of day on this candle and high of day on this candle. And so the close above the bottom of the gap is signaling more upside potential. It also closed above high close horizontal resistance. That was the 45 level right there at the bottom of this black candle. So if it can stay above this 45, 46 level, that should signal it wants to head higher. It could come up here and finish filling the gap. You can see this upper wick didn't hit the red line. Once that 60 levels hit, that the gap will be filled, and then the next target would be the 100-day simple moving average at 78. So we'll see if APRI can follow through here. You can see the 15-minute chart is really bullish. It broke out today midday here at 115 above all the moving averages, and once it got above the moving averages, as long as it's holding EMA's 4 and 8 support there, the chart is super strong. You know, once it closes below the pink and lime lines, that's when it can consolidate. The uptrend's intact as long as that middle Bollinger Band at 39 is holding. Okay, take a look at CLSN, closed up 19% today. So this had a nice breakout above high close resistance. Check out the volume bars down here. It was the largest volume day since back here in November of 2017. So breaking out on big volume above high close resistance from May. You know, it also broke out above you know, the high close from back here in January. So this was the highest close in 2018, and right now it's hitting this resistance level from November. If it can break the top of this white candle here, which it did close above today, just above that red line, you know, and stay above that level, then that would signal it wants to head higher. If it worked back into the bands, you want to see it stay above this 280 to 290 level. You want to see it stay above the high close. That would signal it wants to keep pushing higher. And then, yeah, now you're seeing a little bit of resistance here, you know, on these candles, the top of this candle. So this 370 level is going to be the next big level to break. So keep an eye on CLSN. That was a huge move today. All right, take a look at HMNY. It closed up 26% today. So we were, you know, liking, you know, end of day, this close above the middle Bollinger Band. It was like, oh wow, you know, finally, you know, it made a bullish close. Can you believe that? It closed above the middle Bollinger Band at 41. say it isn't so. I think I even said, don't look now. I mean, or something to that extent, where you can't believe it. It finally made this close above the middle Bollinger Band. Does that mean it's ready to go? Is it going to be in play tomorrow? Is it going to be the big day? Is tomorrow going to be the day it's going to run and head higher? Well, as you can see here, HMNY is now trading at 31 cents. And so it closed at 45. Why is it trading down here at 31 off of the chart? Well, this is the reason, because they're going to have a shareholder meeting, a special meeting, so they want to do a reverse split, and they're talking up to 1 for 250 shares. So they're talking hardcore, and also they want to increase their authorized shares from 500 million to 2 billion. And so the only reason why you would increase and also do the reverse split is so that you can dump more shares. It's just more dilution. This is pain and suffering for anybody that's a shareholder. I'm really sorry for anybody that's in this that was thinking this was heading higher. The chart was setting up today. It's just, if you look at the chart, you can see it's just been all down, and it's all because of the dilution. It's just they're dumping shares, and it's killing the share price. And so that's why you can play these short cover rallies, but they're really risky. Bad news could come out anytime, and it usually comes out after hours. And if the middle Bollinger Band fails to hold, like when it was trading above here and then it dropped below, they're a risk to hold. And so it was looking like a possible play for tomorrow, but yeah, with the bad news and trading at 31 cents, it's signaling downside risk. If you look here at the monthly chart, this is a 20-year 7-month monthly chart. This is going way out there, and as you can see here, it's going for it looks like an all-time monthly close, unless it's traded longer than this. But yeah, in the last 20 years, it hasn't going to have a lower close than it did last month. You can see it bounced up, but right now it's at 31, and so it's down here right now. It's below this 31.2, and so this could be the lowest close ever this month, and now you're hitting levels that the only thing that you got going for support is this wick way down here, and check out the lower wick from 2008, and that's well below 7 cents. I don't even know how low that is, but that's like yeah. So there's no support. So we were just talking about MMNFF and how this is the blue sky breakout. No overhead resistance. It's heading higher. And so now we have the inverse of that, and this is like the black hole drop. That there's no support below. You're just falling into a black hole here. There's nothing to prop it up. It's going to be in uncharted territory besides what happened on this long lower wick, because it hasn't traded at these levels besides this month back here. So you have to go back into 2008 and see what happened on that trading to try to find some kind of horizontal support. So yeah, just to throw that out there. So yeah, it's bad news, and it looks like it's only getting worse for HMNY. And then finally, let's take a look at ALT. Closed up nearly 16% today. So keep an eye on this one. All right, so I'm giving you this one as the one that's setting up. It's hitting the 50-day simple moving average. This is your reward for watching the video. This might be the one that breaks resistance and then turns into a nice play. If it can get above 63 here, that should be the signal that wants to head higher. If it fails to get above this green line with a close, you can see it got above here, but it didn't close above. It has to close above. But if it looks like it's going for a close that day, that would be the day to jump in, because that should signal that it wants to head higher, and then it would have to stay above that level to remain in play. But it looks like it's setting up here, so keep an eye on it. If it were to drop below that middle Bollinger Band at 57, it would no longer be in play. It needs, it's been consolidating in the zone and setting up, and it looks like it could possibly break resistance here sometime soon, maybe tomorrow. You never know. All right, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. I'll post the link below the YouTube video. Okay, thank you.